Good evening. Welcome to G3 Investors. This is not the Alfred Hitchcock Hour. We're going to take a look at the week ended January 4th, 2019. That's the first 3 days of 2019. Happy New Year, I guess. Well, the market started out in what I call the schizoid stock market, the SSM. The indexes on Wednesday were down 1.5%, then reversed to positive territory, crossed the break-even line 5 times during the day to end up slightly. Then Apple dropped some news on Thursday that sales had stalled on their iPhone, and that led the market to big losses. The Dow was down 660 points for the day, and the Nasdaq lost 3%. Those 2 days was consequently the worst start to a new year in modern market history. But Friday, the Fed to the rescue. The market surged on Friday, absolutely surged, wiping out all the losses on Wednesday and Thursday, as a result of comments from Fed Chairman Powell, who basically said QE forever, and we got your back. The market liked what it heard. And then to add fuel to the fire, if you will, we had a jobs print of 312,000 new jobs added, 3.3% wage growth. You know, anybody out there who says that Donald Trump hasn't had an effect on this economy either hates Donald Trump, have Trump derangement syndrome, or they're Democrats. And I'm not knocking it. I mean, I don't care what party. Money doesn't care what party affiliation you have. But it's just, you have to look at it and just say it's marvelous. Okay, now the NASDAQ surged on Friday, up 4.3%, whereas all of the other indexes had 3 handles, as you can see up here in the corner. You know, again, I harped on it all last year. The Fang Man stocks, which we'll look at here in a moment, you know, they lead the market up, they lead the market down. And they were up 3.4%. On the week. So that pretty much tells you. And as I said, the Fed just basically said, hey, we're going to do whatever Donald Trump wants, almost. So the market translated that as we're going to have 2 rate hikes in 2019, and they're good with that. Now, Apple, which was the first $1 trillion company last year, ended down for the week. They fell 5%. They fell 10% actually on Thursday. But the big key is they're now in 4th place in terms of market capitalization. What a stunning turnaround. I'm sure Warren Buffett is probably not happy, and even though we won't find out what he has done this last quarter, my bet is he sold some Apple stock. But he's an investor, Greg. He's not a trader. Sorry, he's an investor. Or he's a trader as well. Everybody's a trader. At any rate, you can see that the Russell month to date or year to date, which are one and the same, and actually the week to date are all the same. The Russell has been the leader here, whereas last year it was the Nasdaq, and Nasdaq's 2nd place, the NYSE 1.4, and the S&P, and the Dow. Well, how did the model do? Well, we started out pretty bad. I've had 6 closed trades, and all 6 were losers, small losers. We'll get to that in a minute. But we're still up 0.6%. Now, Bob is my imaginary buy and hold friend. He is ecstatic because he's beating me for the first time in months, if not, since the inception, by 0.5%. So he's a happy camper. The S&P beat me by 0.4%, and the Nasdaq by 1. Now, when we look at the technicals, while we did have an improvement on Friday, okay, we are still in a bear market, and we'll look at that again when we get to the charts. But this is a really good sign. We have 25% now that are greater than their 50-day versus 75%, which are less. That's still bear market territory, folks, but the improvement is there. It's a nice move in the right direction. And again, we still follow the 40 ETFs, even though I've changed it to where we likely will only trade 28 of those during the year because I'm trying to cut down on the number of trades, getting complaints from people that I can't stay awake. I'm boring them to death, but Of the 40 ETFs followed, 7 were above their 50-day moving average. 5 of those were the short ETFs that we follow, and the other 2 are gold and silver. So again, very, very, very conservative market. Uh, it's a bearish. It's 93% of the ETFs are negative, and 31% have black crosses, and you know what that means. No, I'm not against the Catholic Church, but it means that the 50-day moving averages cross the 200-day moving average, and anyway, it's not good. But I misquoted. It's 3.6% instead of 3.4 up there. Sorry about that. That's the gain this week for the big FANG man stocks, were Facebook, Amazon, Netflix, Alphabet, which I call Google, Microsoft, Apple, Adobe, and Nvidia. Been watching these stocks for a little over a year now, and they are still there. These risks that I talked about last year, they still are out there. So we are not in a bull market, folks. We are in a bear market still. And I'm not saying we're not going to stay in it. Hopefully we won't. Here's the 6 losing trades we had. The market head fakes us and got us in and out in one day on these 3 here, and then we lost on a short. Then I went overnight on the short and stop that, Greg. I have to hit myself. In a market, something I need to explain. In a bear market, you have violent moves everywhere. I mean, you can just look at this week, and we'll take a look at it here. But I'm singing to the choir. But it's very extremely hard to short the market. So typically what we end up doing, we end up scalping. And even when you scalp, you can get scalped. Here's a scalp that we pulled on the first day of trade, and we lost $190. And I mean, it just happened in a matter of literally hours. So it's tough. Now here's our open positions. We have 17 open positions. I gave people homework, so you can pause on this screen here and look and see if you got it right. Hopefully you did. If you didn't, email me and tell me I'm crazy, or email me and say I didn't understand this, and I will get back to you. All right, enough of that. Let's look at the heat map here. And wait. I want to take a look at that. There was nothing that happened on the mini model. Okay, this is what it looks like updated. This portfolio is designed to trade, 10 to 20 times a year, once or twice a month at the most, if the market allows that. But there's the trigger or entry prices on all of the 4 ETFs that we trade. We trade the NDX 100, we trade the short of that, we trade the SPY, and we trade the short of that. And this is for somebody who has a smaller portfolio, or is just getting started out, or is a weekend warrior and doesn't have time, to trade every day. I'm not really retired, but I am retired because this is my job. This is my day job. I love it. I was a controller. Believe me, I was a controller for 30 years, or CFO, or whatever you want to call me. I was called everything but early to dinner. It's great. You feel like a swashbuckler, and when you make money, it's great. And if you lose money, as long as you keep your losses small, no harm done. So let's get back to, I want to take a look at what's a heat map? What's a good day look like on the stock market? Well, folks, it doesn't get any better than this right here. This is what it looked like on Friday, October the 4th. That's the one-day performance of the S&P 500. It just is amazing. I mean, there is Advanced Auto Parts lost money. That's about it. That's the only red one, and it lost 2.5%. I mean, that's not good to lose 2.5%, but I don't ever recall it looking greener than that. That's green. That's Mean Gene green. All right, let's look at the performance for a week. Now we get a mixed bag, and there you see where Apple's down 5%. But look at Amazon. Look at Netflix. Look at Facebook and Google. Those are all solid returns. Even, where's Nvidia at? There's Nvidia, and there's Adobe. Well, Adobe's losing out to Oracle and Salesforce.com, but there you have it, folks. Now the banks did good. You know, basically Powell said, "Hey, I'm going to keep the rates low forever." You know, I mean, and the biotechnology did really good, and we caught those two moves, a little bit of it anyway. All right, now I'm going to turn to a different subject here. I'm going to show you how I draw something that's called a bull market flag, and I'm using the 10-year composite index. So, you know, bear with me a little bit here. I'm going to try to use this highlighter. But basically, you see this box I've drawn by. If you go back, and this here is a monthly chart. It's a 10-year monthly chart, and I'm using it because to me it's easier to see. But as I've explained before, we're climbing the mountain here. Okay, this goes back. I believe this is clear back to 2009, which was the bottom, March of 2009, which was the bottom of the last bear market, if you will. Although we're in a new bull market, or bear market, we'll get to that in a minute. And so we climbed the mountain, and it took us 10 years. But here's an example of what I call a flag. Okay, see this purple vertical line right here? It goes down to here. Why? Well, because we draw a flagpole, and we put the flag in there, and we go, hey, here it is, right there. See that little drawing right there? That's our flagpole. Oh boy, I'm not really good. Maybe that's hard to see. And then you got this sideways movement. Now keep in mind, these are weeks. 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13 weeks. That is a perfect bull flag, where it just basically stayed below this line and it stayed above that line. So there's our box, if you will. And there it broke out. So we draw a little box there. Hence, there's our flag. The X marks the spot. That is a bull flag. It's just that simple. That's how you draw it. Now, I can draw one of those on any time period. Okay, I just did this so that you can clearly see technically what traders are doing when we say that's a bull market flag. Why is it a bull market? Well, because we're in a bull market going up like that. Okay, and it stalls right here. Okay, that's the stall zone right there. That big old zone right there. And then right there, it popped out. It went sideways a little bit more, but it's trading or living above the line, if you will. And then, boom, takes off again, goes up, does another little flag right here. See how easy that is? Draw another flag. What's a bigger flag? Well, we could stop it here. We could stop the flag right there. It still looks like a flag. And look, one more. There it is. Boom. Now, there it is. G3 investors. Why do I call it G3? Well, 3 big flags. One, the biggest flag is at the bottom of the mountain because it takes a long time to get here. The second one takes a little bit shorter, and the third one takes the third. Now, I don't know how to change colors on this, folks. I'm just starting this highlighter. But when we come down, now I'm going to draw something called a bear flag. Okay, and it's just inverted. It's just an inverted bull flag. Right there's our flagpole right there. And it's just starting right there. You know, it says, hey, I'm going to trade in this little box right there. And there's my bear flag. Wow. Ain't that something? It is absolutely amazing. It really is. But that's all. That's how simple it is. Now I'm going to do it again. I'm having fun here. I'm going to open a highlighter. I wonder how you change colors here. Styles, help. Nope, forget it. Anyway, now this is a little bit longer look. Here we're going to go from 1994, okay, to April 2009, and we're doing it on the S&P 500. This is a monthly chart. The other one was a weekly chart. Why am I showing you this? Because I'm showing you how easy it is to spot these flags, if you will. Hey, I'm going to draw one right here. Whoops, I got to hit my highlighter. Sorry. Okay, so we've got a flag going right there. There's my flagpole, and there it is. I've got another flagpole. It's going to go. Let's go out this way. We'll draw. We're just counting the months. 1, 2, 3, 4. It formed another flag. There it is. I'm a terrible drawer. Now here we actually had a bear market correction, and this happened in 1999, okay? So this bull market that was started here had a correction, but it's still a bull market. Look at the next one. I mean, look at the flag on that one. It's clear down here. See how easy it is to draw those flags? Now they're starting to get squirrelier and shorter, if you will. Okay, that's a pretty short flag. Now look what happens. Now we've got something going on here. There's a flag. That's a bear market flag. Notice how these two are just about the same size. Okay, and then we go way down here. Okay, and we have another one. Okay, until we hit the last flag. Okay, bull market flags. Isn't this fun? Don't you feel like I'm in kindergarten? Okay, anyway, there's the last flag up on this one. Now we start to come down. Okay, notice how these flags, the boxes, are more narrow. They get wider as you come down. That's the movement I'm talking about, where the movement in a bear market is very exaggerated. Up and down, up and down, up and down. And you're like, holy cow, Gallagher, what are you trying to do? Drive me crazy? No, I'm not. Now here's what I call the fall off the cliff flag. Okay, look at this. This is just, and this happened in 2008. Look at this flag. I mean, the pole goes clear down to here. And the flag's like right there. Okay, there's our little flag, if you will. And we're off to the races again. So there you have it. Now, why is this important? Well, it just helps. It's another tool in our trader toolbox that helps us understand how the market moves up. When it moves up, the first move up the mountains, usually the first couple moves are pretty big. But when it goes down, it goes down, the moves can get really violent. You're falling off the cliff, if you will. You're climbing up the mountain, you're falling down the mountain. You're climbing up the mountain, you're falling down the mountain. Now, overall, if you look at this period here, which I don't even know, I'm just saying, calling it 15 years, you call it whatever you want, but you look at this period of time here, and it looks like we climbed a mountain, we climbed down, we climbed another mountain, we climbed back down, we're climbing another mountain. And if I took a 100-year chart and I showed you this big period here, this big period right here is a giant flag, and the pole's way down there. It's just that crazy. It really is just that crazy. I'll show you that sometime. All right, so let's take a look at the market. Why am I saying? Well, here's why I'm drawing these lines. Notice this pole here that I drew all the way to the bottom. That's because that's when the NASDAQ topped. I didn't know that at that time, and it doesn't. My trading system got us out because we consolidated here and it broke down. Our last three bearish trading days were those, and as soon as we broke below that, we went to cash for the NASDAQ. Well, we don't trade the NASDAQ, but we trade the QQQ, which is the NASDAQ 100. And so we got out. How did I know this flag was going to form at this point? I didn't. I did not know. But it is forming. Again, I'm going to open it up and highlight it. Okay, but if we draw our flag here, we're going to come down and we're going to go down, 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 down. There's where it stopped, right down there. Okay, and there's where it consolidated, if you will. Now that's not perfect, but you get it. It's an inverted flag. Then we just basically go consolidate it again. So I could have drew it out there. Wow, that's a long consolidation. It looks long because this is a daily chart. It's a 6-month chart, but it's not that unusual. Okay, and then what happened? We broke this little box here, if you will, right there. So I draw another flagpole, and we're there, and it's probably going to be there. So I should draw this flag line up to that line. Planted my pole upside down right there. So that's what's happening. And because this blue line here has crossed this red line, this is the 50-day, that's the 200-day moving average, that is a black cross. No knocks on the Catholics. That's a black cross. Okay, and what it means this is in deep trouble. This is in technical difficulty. Does it mean the bull market's over? No, it means we're in a bear phase because we happen to be 20%. To me, I don't care what you call it. Call it a correction, call it a bull market, a bear market, call it a ugly market. Doesn't matter what the name is. It's the expectations. You can see how more consolidated the move is up here. And if we just click on this, I don't know if I can do that. Not with highlight on, I can't. So I'll quit highlight a minute. So if I go out there and say, hey, I want to go to a yearly chart, again, a daily yearly chart, it got squirrely there, but it calmed down and went up. Now it's getting squirrely on the way down. Well, that's what happens when it's bearish. Okay. All right, this is getting long-winded. I've got one other chart here I want to look at. And, well, I should look at the S&P, for goodness sakes. The SPX. Okay. Same thing, the flag. Okay, why do I say that the NASDAQ leads the S&P 500 and the Dow and the other indexes that I follow? Well, I say that because this poll didn't really start until here. It didn't cross over, if you will, until this big down day right here. And that's the 9th. Whereas if we go back to IXIC, which is the NASDAQ Composite Index, 2,400 stocks or whatever it is, that's on the 4th of that day is over here, up here. It's up here when I highlight on it, I'll tell you what date it is here. It's hard to see, but anyway, that's the 4th of October. Trust me on that. And when we go back to the SPX, there we go. It's on the 9th, so it's 5 days behind, if you will. But it's, nevertheless, look at the flag we got. It's a big bear market flag. I mean, again, I'll highlight it. It's easy to do. Right there. We're gonna plant the flagpole right there, and we're gonna go down. There's the bottom of our flagpole. There's where the top. Okay, and our consolidation is starting right there and right there. Now, how long it goes there, I don't know. My bet, if I was a betting man, we're going to go back up and test that number. As it comes down, we're going to test that number somewhere out there. That's how it works. Technical, when people say, I don't understand technical, how you can do anything with technical analysis. Well, that's what this website is all about, to teach you how you can take advantage of things with technical analysis. Excuse me. Okay, last chart I want. This is a chart that somebody put up on Seeking Alpha. He's a fellow trader, and I didn't ask him if I could use it, but it's really good. I mean, he basically shows all the activity that caused everything. I love this. He nails the day as the Santa rally, Apple warns, the Powell pop, just all these down things. And, Nothing Burger. I love that one. And it's true. It is Nothing Burger. That's what happens. That's a flag. There's the flagpole, and that's a bear flag. There's the flagpole, and that's a bear flag right there again. It's that simple, folks. And I mean, trading, it is an art. It is hard. It is not something you can't learn, though. It's very easy. It just takes a little time. So yes, why am I going through all this? Well, sign up for a year. Sign up now for free. You go to our website, g3investors.com. You can sign up. It costs $200 a year. If I take my wife to Ruth Chris, I spend $200 because I always buy a bottle of good wine. And it's just like, what's $200? I mean, it's a night out in town with your significant other. But anyway, the best news is right now it's free until January 31st. So don't hurry out to the store. Just email me at greg@g3investors.com, and I'll sign you up now until the 31st. At any rate, this is Greg Gallagher saying good luck and always good trading.